What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you, as always, I am the bearded boy wonder, Dave Bartosiak. And today, my friends, we're snapping off. Talking about Snap, ticker, well, Snap. Snapchat, my friends, which I guess now wants to be called Snap or something. Of course, even before the IPO, they wanted to be called Snap. Lots of stuff to talk about today with these guys. Remember, I've got the live chat window popped up. Already got Kurt saying what's up. What's up, Kurt? There is a little bit of a delay, about 30 seconds, between when I say something and when you guys see it. So there is that. Kurt, Danny, Trevor, usual suspects. What's up, gents? All right, now, couple of things. First, we're flying blind in terms of the price consensus and EPS surprise chart here on Zacks. And reason being, well, this is the first report really after the IPO. So we can basically take this and just throw it in the trash because we're going to learn nothing from this. So that kind of stinks. But let's take a look at what analysts have had to say here recently. So we do have it as a Zacks rank number 3 hold right now. The stock's up a little bit here ahead of earnings. They're going to report after the market closes tomorrow. That's Wednesday. Tomorrow? Oh, it is tomorrow. After the market closes tomorrow. That's right. And remember, guys, I did a little switcheroo per your requests. So we're going to do the live Q&A tomorrow at 9 a.m. and then move the Nordstrom event to Thursday morning. So there you go. Revenue. This is amazing. So revenue growth for next year. Right now they're making about $1 billion a year. They want to make $2 billion next year. So 97% revenue growth. That is phenomenal. EPS, obviously, we don't have a lot of data here. But they're looking for negative $2.33. I don't think we got to worry so much about this number. I don't think that's what the market's going to be concerned with. But next year, we are looking at 73% EPS growth. So, of course, it's all about the growth story. Nobody's come out and gone in either direction. So that's why they're Zacks rank number 3 hold right now, because nobody's brave enough to come out and make a move. But here in the early stages of this stock, you've already seen analysts increasing their earnings estimates. So they were looking negative 247 30 days ago. Over the last week, now that's bumped up to negative 233. So still losing money, but moving in the positive direction. So that is for sure a positive. Then we have here next quarter, we're going to lose 22 cents, up to 21 cents. So that's good. And current year numbers have improved. And next year numbers have improved as well. So lots of improvement, lots of growth, because that's what this is. This is a growthy sort of story. Of course, we don't have any surprise history because we haven't had anything. So what are we looking for from Snap? I stole a chart. I'm not going to tell you from where, but I stole a chart. I can't make this any bigger, can I? Can I zoom? I don't think I can zoom. Let me see if I can zoom with this. No, they won't let me zoom with that. So I don't know if you guys can see this, but this is daily active users in millions. So this is what people are worried about. It's daily active users and daily active user growth. Now, heading into the IPO, Snap warned that their quarterly daily active users growth is what they said lumpy. Looks pretty lumpy here, right? Where you got 74% down to 51 to 57, 51, 53, 66, 63, 78, or 48 rather. So what they're saying is that this user growth, the daily active user growth, is like centered around promotions that they have. So throughout the course of random quarters, they have these promotions. Somebody spends a bunch of money and puts it on their website or puts it on in their TV broadcast or their commercials and really starts pushing the whole Snapchat thing. I guess the thing that you really have to do here with Snapchat is let's not um, impose our own beliefs on what we think the merit of Snapchat's underlying business is. I warn against that because there's a lot of people who go like, "Oh, that's stupid. It's just pictures, like a little video. Who cares? It's all dumb. It's for 15-year-old kids, right? 15-year-old girls." Just because maybe you're not involved in it, you don't use it. Let's try not to just lump it in and just say like, oh, it's for stupid people because I don't use it, right? That's a way to lose money because you really got to pay attention to these things as they're coming out. But on the same token, you do have to go, okay, is this like a little fad that's going to burn out or is it not? Now, the good news here is that you don't have to make that decision. We don't have to come out and say, okay, this is going to go out of business soon, right? Because it's not. But what we do have to do is try and figure out what's going to happen in this company for this quarter and how's this quarter going to go. So I'm going to say that we're targeting 100. One of these guys said 169 million was the daily active user number they're looking for, up 39% year over year. It's going to be hard to tell what the buy side is going to be happy with, seeing as this is in fact the first report. So these are all kind of like very iffy questions heading into this right now. So have to be a little bit concerned, and that's part of the reason why the stock has done what it's done. So quick question to you guys here. How many of you folks use Snapchat or just Snap? Because I don't have like an official Zach Snap or anything. Oh my God. By the way, guys, look at the risk on that's happening. Man, Dave, when you're right, I know. And sure enough, that yen broke out from the top of that trend, and it is off to the races. So that's no good for the gold, folks. Woof. Oh, this is gonna get ugly. Anyway, I'll go back to I'm gonna cover that tonight in my daily dive, of course. Now look at Snap. Yeah, no, right? None of you guys. I have it, and I think the reason that I have it is I have friends back in Chicago, and they like to kind of check in and see what I'm doing down here in Miami. So I do that. And I look in it. My girlfriend uses it a lot more than I do. She actually looks through the stories and gets like news events from there. I haven't really done that yet. I think it's because I'm not, on the go right now. I just have, I'm just loading stuff up here on the computer. So what do I need to go on Snapchat to learn what happened in the world, right? So I don't know. I haven't quite wrapped my mind around it. But the other thing here is huge spike following the IPO. Obviously, this was overpriced. Shares came down and now have carved themselves out a nice little bottom here, okay? Now, what does this bottom mean? What it's done is helped put in nice key levels here for us from the intraday spike following earnings to the lows, and has given us some decent places of and areas of support and resistance. So you got the first retrace up to the 50% retracement level, which they sold pretty hard. Then they caught a bid at 23.6. They got topped out. I mean, you can't write this stuff, right? Got topped out at 38.2. Tried to push them back down. That didn't work. So shy of the lows, the buyers came in. So that's good. So we know that this is pretty much a solid floor. So this is just under $20. Then breaks on through the 23.6 again. Now a little bit of resistance at the 38.2. They tried to rally back up to test the 50% level. Didn't do it. And so right now we are right here, basically spot on the 38.2% retracement. So nice little line in the sand here. Now, it is north of that line, though, but yesterday it was south of that line, so you can't really, it's just kind of flipping and flopping back and forth. I would say the market point of control right now is right here, right where we're at, so that's good. Now, when we're trying to figure out where this thing might go, definitely keep this high and really this level as our support and resistance levels that the market is likely to bounce around within. Okay, so what are these levels? Let's get a key on this level. Let me get my fuchsia out the way. So 2140, we'll call it 2135, 2140. So, and because I know we're here trading options, folks, 2150s. So keep that 2150 to the downside. And then the upside, again, this really the highs of this day, 2440. So we'll call that 2450. So just based on what the market is telling us right now. Oh, and I guess I should throw in money flow on here because we haven't looked at that yet. And money flows have been positive. Now I know you're wondering, Dave, how come this money flow doesn't start till mid-April or later in March? That's because this is the money flow over 21 days, so I needed 21 days on the chart in order to do it, right? And this is what we have right now. So we've got money flows that are on the way up, which, well, I guess really you could see this as two waves. So first we had an initial wave higher that ran out of gas, followed by another wave. So overall, the trend has been in a bullish direction, kind of like overall the trend here has been in a bullish direction. So we're not learning too much from the money flow. However, if you're purely playing off the cross of the zero line for a signal, then you had a signal here in probably, what was that, last week? Yes, last Wednesday was a buy there, okay? And commodity channel index a little bit overbought, but again, we're kind of limited here. We're not catching much, and obviously I don't even have a 50-day moving average. It hasn't even traded 50 trading days, so very new stuff going on here. And if you wanted to, you could always break this down and go, on an hourly chart, and then you could learn something, right? But because of the session breaks here, I don't really like looking at hourly charts like this in this regard, just because so much changes on a day-to-day basis. I'd rather look at the dailies and really get a much further out perspective on something like this. Okay. Whoops. Okay. Let's see. I should probably close my Microsoft Outlook so you guys aren't seeing all the emails that I have coming in. So I took care of that. All right. Done. Now, what's the options market saying about this right now? Open up the bar charts. Go ahead, throw in the ticker SNAP here. And then open up the options quotes, as always, on the bar charts. And so they're going to report after the bell on Wednesday. So we're good with the May 12th options expiration. Change it from the stacked view to the side-by-side view so we can have calls on the left side, puts on the right. 23.28 is what we're talking about here. 23.28. So we'll just call it 23s, make our life easier. Pull up the handy-dandy calculator, 155 by 160. We'll call that 158. Plus the 23 put is 160 by 170. We'll call that 165. They're looking for a $3.23 move here, which would be good for 14%. So they're definitely expecting volatility here out of Snapchat. $3.23 is what they are expecting. Now, on a stock that's trading at 23, let's just go ahead and say 20 on the downside, right? And 26.50 to the upside is what they're pricing in. Now, our technical levels were within that. Our technical levels were 21.50 and 24.50. So the options market is saying that we are likely to break through those technical levels. At least that's what the options market has to say. So they are really expecting a big move here out of Snapchat. So 26, look at that. 3 to the upside, 26.60 They're expecting to break through this level and get through the 61.8% retracement, pushing even higher. Let me draw the 76.4 just so we have it right here. 76.4. Yeah, so they're talking big, huge moves. So the options market's pricing in all the way up here and all the way down here. Wow. Well outside of the range, the trading range. But I think they might be right. I think this one is liable to really move in one direction or the other. Okay? All right, so let's get back to the options chain and see what we can do here. Switch from the side-by-side view to the stacked view. And let's think about credit spreads first, okay? So here's where the market is saying basically won't happen. Look at this big chunk of open interest down here at 24s, near 25, and then 27. And then of course there's chunks here, every even number. But that's surprising for me to see that 12.7 all the way up at 24. We said that technicals are really here, this 24.50 level, right? Okay. Now, I don't know that there's going to be a safe way to play a credit spread on these guys, right? Because it does look like it's going to blow on through everything, and if it blows through this technical level, then surely it'll approach here. Okay. Quick question here I'm seeing from David that I want to address. Will the institutions that brought the IPO to market want to buy the stock if it tanks in after-hours trading, or flat out buy after the earnings announcement? So if they didn't come in, so remember the actual IPO was like, I think it was $17. So it never got anywhere even close to that, right? I think I thought the IPO price was 17 and it opened at 24 the first day. I seem to remember that's kind of what happened. So I don't think they're too worried about it. If the stock completely crashed, maybe there would be a stopgap down near 17 that these guys would come in, but I don't think they're worried about it right now. I really don't. Okay. So back here. So let's just say we go out to 26.50. And again, an idea of a credit spread that you guys can do. There's 4,000 contracts there. Pretty amazing. 816, 15s. Okay, now here's something. I'm just catching it sort of live here while we're talking. I thought maybe we go, okay, a 26.50, 27.50 call spread that you go short. The net credit's going to be 15 cents. Just eyeballing it, I also see where there's higher open interest on the 27 call. You can get 43 for selling that, and it'll cost you 28 to buy the 28. So there's a 15-cent net credit also. So there's really no incentive for me to go short to 26.50, 27.50 when 50 cents further will do. So I think if you're going to be a bear and you want to do a credit spread, that this is the way to go. So bear credit spread is short May 12th, 27, 28 call spread for 15-cent net credit. Okay? So on 15 cents, your risk is going to be 85 cents. So you can make 17.6% on this one. Okay? Now, I'm going to just right off the bat. Oh, man, it's a big calculator. Just right off the bat, guys, I'm going to tell you right now, I'm going to show you a credit spread on the bull side and on the bear side. And credit spreads are not the way to go on this stock right now. I don't think so. Okay, so on the flip side, we said the downside of this market, as far as the options are concerned, is $20. So we're going to look here, and the $20, oh, that got skinny on me. And that's too fat. I'm like Goldilocks with this thing. That's just right. Okay, so $20 down to 19. And again, look on the put side where the open interest is. And the biggest is at 2050 here, which is kind of surprising to me. Anyway, so putting together this 19, well, let's call it the 2019 put spread because that makes a little bit more sense. Now this is a little bit more attractive than the other side. So the bear, or the bullish rather, credit spread here is going short the $20 put. Get 45 cents for that one. Simultaneously going long the $19 put, you're going to pay back 25 cents. So you could put this on for 20 cents, right? Now the amount of money you're going to have at risk here, the difference in the strike prices, is $1 minus that 20 cents. That's 80 cents. So you can make 25% on this one. And all you need to have happen is shares of Snap to close at or above $20 at expiration. So the bull credit spread is short the May 12th, 2019 put spread for a 20-cent net credit. Okay? All right. Now let's get elbow deep in this thing. And let's go to June. I know you guys, I have a tendency to go a little bit further out. You know what? Let's not do June. Let's just do May 19th. Because of this. Because this isn't an analysis that we're doing that's predicated on how the market's going to react to EPS necessarily. Really, there's one number that we're going to be concerned about, and that's the daily active users. So, post-earnings drift, I don't know that that's going to take place. But what I do like to have is just a couple of days for things to work themselves out and go in a certain direction if I'm putting together these directional, debit spreads. So I think you can lean on the technical analysis side that we had and go and say, okay, 26.50 maybe not, but 24.50 sure. And I think you're going to be surprised by the reward that you get in something like this. Going long the $23 call here, and this is the May 19th expiration, you could do it for $168. Simultaneously shorting the $24.50 call, you're going to get back $110. So that's 58 cents that you're going to have at risk. Now the difference in the strike prices is $1.50 minus that 58 cents. That means 92 cents. So you can make 92 on 58 or 158% rate of return. And you don't even need this thing to go as much as the market is essentially pricing, right? As the options market is pricing. So we can catch 158% potential just on that quick little move. But let's just see what the further out spread would look like and where that price is out, just for giggles. So in this case, you're still going to pay $1.68 for the $23 call. Simultaneously shorting the $26.50, you're going to get back 60 cents. So 108 is going to be the net outlay on this. Now the difference in the strike prices in this case is 350. Minus that 108 is 242 divided by your 108, and now you'll see that this is some major bang for your buck here, as you can more than triple up on this trade. So very nice, but the stock has to go much further. It has to go past where we thought was a pretty good level from a technical perspective. So there's 158% on the table here. And, what's 158? Man, you can't do this with the color thing at the same time. 224 minus 158. So another 66% that you can get, right, if the market goes the distance. Now, here's the thing. I'm going to show you, let's price out. Let's say we go long the 23, 26.50, and the market does only get to 24.50. Then what's your rate of return potentially going to be? Well, the 108 would still be the amount of money that you had at risk when you put this on, right? Your 26.50 call that you're short is going to expire worthless, but your 24.50 is going to be worth 150. It only cost you 108 to put it on. So you're going to get 42 cents essentially on the 108. So you're going to get a 38% rate of return, right? So you're not going to end up doubling up until, or even getting the 150% rate of return, right? So doubling up on this trade, you'd have to get all the way to 25.16. Okay, and then once you get past this level, it just goes exponential, right? And it looks great. So I think the bull debit spread is long the May 19th, 26.50 call spread for a 108 net debit. Okay. I think you got to be more aggressive. Be aggressive with this thing. It's gonna run all over the place. It's gonna go crazy. I think if it hits, it's gonna hit fantastic. And on the flip side, if it evaporates, it's gonna get ugly. So let's do the same thing on the put side. I already kind of walked you through the logic of what I was looking at there. Rather than be at the 23, because this is sort of in between, I'm going to anchor with the 23.50. So here we'll do I did it again, the 23.50 put. And again, this is the May 19th. And then let's say that they're right and this thing goes all the way down to 20. So 23.50 put's going to cost you 203. Simultaneously selling the $20 put, you're going to get back 53 of those cents. That's $1.50. Look at how nice and pretty this is. $1.50 net outlay. The amount of money you can make is $3.50 on this trade, right? So essentially $2 in profits on your $3.50, or $2 in profits on your $1.50, right? 130%. Part of the reason why it's not as much is because there's a little bit of juice in this put that you're going long, and that juice isn't available, isn't on the call side, which is pretty interesting. A little bit more juice here on this put. Okay, so the bear debit spread is long May 19th, 23.50, 20 put spread for a 150 net debit. I'm intrigued that this one is so much more expensive. I think there's just more people betting against this right now, is what I'm seeing. Look at this huge chunk of open interest here. At 21.50, they got 18,000 contracts. Here there's 7,900. There's a lot of people betting against this. I think they're good. All right, so officially, guys, I think they're going to be wrong. I think that Snapchat, because look, just by having the IPO, just by being a newly publicly traded company, there were a whole lot of people last quarter that were like, oh, hey, let me check out the Snapchat thing, and checked it out and downloaded it on their phone and started messing around with it, right? So I think that is a good reason why they probably have more daily active users this quarter than you would believe, right? So I think going with the bullish debit spread is the way to go. I think so. I think they can break up and really rally because we know the negatives already. We've seen where the bottom was. I don't know that this is okay. So remember early days of Facebook, they struggled a little bit, had a little situation like this. Twitter basically imploded there for a long time, and now suddenly is getting in the good graces of things. I think maybe Snap just way overhyped in the beginning, sold off, should have sold off, and now it's all gonna be about this daily active user number. I think it'll be a good number, and I think you're gonna see a huge rally in the stock. And yes, these shorts are gonna be headed for the exits. Lotto tickets, my friends. I mean, we've got the all-time highs basically up at 29.44. The options market's pricing in 26s, 26.50. I think that's where the lotto is. I think the lotto's up near 26. I think the 26s are the lotto. A little more expensive than I like to make these. And you certainly could really get a gnarly call spread in here if you wanted to. But I think for the purposes of this random lotto ticket, that's the way to go. So lotto. Oh wait, hang on. Wait a minute. We don't have to do the 19th. Lotto is ultra short term. Let me see. Maybe these will be cheaper. And of course they are. Well, not much cheaper. 60. So the 26 is 60 for that, and then a week out was it 70? So you pay 10 cents for a week, right? All right, but all that action is going to happen here, which is good. Okay, yeah. So the 26s. I think there's your lotto. So lotto is long, May 12th. 26 for 60 cents. Cool. All right, guys. I think that's it. That's the agenda officially. I have to be bullish heading into Snapchat here because I think that daily active user number is going to kill it. I really do. And we'll see. And we shall see. I don't know about doing the credit spreads on this one, guys. I just feel like this thing is they're just waiting. Like everybody's talking about this. They want this thing to really rally in one direction or totally just run down the hill into the drain. So I think this thing can move 20% on earnings today. I really do. Earnings tomorrow. I think it's really going to fly in one direction or the other, and things are going to get nice. So going with the debit spread, I think is the way to go. Hopefully it works out, my friends. And the other thing is, don't be afraid. You can, if you want to put a straddle on, if you want to just buy the at the money call, at the money put. That's not a terrible idea either, right? In the hopes that it just goes one direction or the other. We already did that pricing essentially. It's going to cost you $323 to put that on, right? It's going to be $323, and just hope that it moves more than $3 in either direction. I think it will. So I think that's a way to do it too. And yes, they're going to report after the bell tomorrow. Okay, guys. So that's all I got for you here today. Tomorrow morning we're going to do the morning after, where we will do NVIDIA, because NVIDIA is going to be tonight. What I'm trying to do, I'm trying to recruit a couple of guys to do live after the bell earnings reactions with me. And by a couple of guys I work with, I'm trying to get Bolin to get in on it. And we would literally just sit here watch the thing live, look at the after hours movement, and just talk, trader talk about what's popping up and what the opportunities are. I'm trying to get these guys to do it, but I don't know. They don't want to do it. I gotta find somebody. We gotta figure it out one of these days, because I think it'll be hilarious, to be honest with you. But it might be R-rated, because oftentimes my live reactions are just me sitting here swearing at the TV, at the computer screen. So, all right, guys, that's all I got for you here today. Remember, tomorrow at 9 a.m. we're gonna do the morning after reaction, and then we've got so we're not gonna do any report tomorrow, right? Or are we still doing something tomorrow? Right, we're gonna do nothing tomorrow, just the morning after, and then Thursday we'll do Nordstrom, the GB review, and then Friday will be our Home Depot trade. All right, guys. So thanks so much. I will see you all mañana. Have a good one.